Hello and welcome in this tutorial on how to use the sports and recreation financial model template. This template can be adapted to any sports and recreation business like an indoor soccer business, paintball, laser tag, and many more. The first tab that you will see is the color coding tab that will give you an overview on how to interpret the different cells that you will find in the model. So for example, the input cells are the cells that you can modify and edit in order to adapt this financial template to your specific business. They are yellow with blue font and dotted border. So just feel free to modify those cells. Hard-coded cells, you won't find any in this particular model. Output cells are the result of a formula. Link cells are cells linking to another formula, sorry, to another cell. And not applicable cells are cells that you can ignore because they are not considered by the model. The model will adapt itself while you go through your inputs and adapt the inputs to your specific business, and will color code certain cells as not applicable in order to tell you, okay, based on the scenario that you are building, based on the business that you are developing in this model, no need to fill this specific cell. And of course, do not change hard code cells, output cells, and link cells, and not applicable cells. Just touch the input cells. Then the next tab is the table of content tab. The table of content tab gives you an overview of what you can find in each tab. So for example, in the input tab, you will find assumptions of the model and the input cells that you can modify to fine-tune the model to your specific business. The dashboards tab, financial statements and valuation will allow you to have to see the result of the model with several metrics and charts in the dashboards tabs. The financial statements, the 3 pro forma financial statements for a period of 60 months, so profit and loss statement, balance sheet and cash flow statement in the financial statements tab, and the valuation, so an implied valuation today based on the projected present value of future cash flow in the valuation tab. And then we have the calculations tab where you can see all the different components of these metrics. So you will see the revenues, all the components that constitute your revenues, your cost of goods sold, your expenses, full-time employees, your capital expenditure, and your debt. Let's start. So in the input tab, you can see, so basically every tab in this model is divided into sections. And in order to expand a certain section, you just need to click on the plus button. So by clicking on the plus button, you can see the name of your company. This specific model is for an indoor soccer business. So you insert the name of your business, the financial plan start date, the fiscal year end when you open, when you actually start operating your business, and then the currency. Then in the company specific information, you can select the cash starting balance and the corporate tax rate. In the quantity section, you can select how many work days you are open per week. Sorry, this is a typo. This should be weekdays. So how many weekdays you are open every week from Monday to Friday, and how many weekend days, Saturday and Sunday, you are open. So in this case, you can select a number between 1 to 5 for weekdays and between 1 and 2 for weekends. Then how many hours you're open per day, and the slot time. So basically, for this particular model, an indoor soccer plan, let's assume that this financial model assumes that you are renting the field for a specific amount of time, and this amount of time is the minimum amount of time is half an hour, so 0.5. And so you can select here how many hours you're open per day and the minimum sale slot, so time slot. So by combining these two values, we get that every day within those 8 hours, you have available slots per field per day, 16, right? If you select 1, you will have 8 per day that you can sell. But since you sell slots of half an hour, you can have 16. Then you can select the number of fields. So how many fields in this indoor soccer business do you have? Maybe you plan to increase the number of fields over time. So 3 from 2024 and 2026, increasing to 5 in 2029 or 2028. you can see that we have the first not applicable cell here. And the reason is that we have selected the 1st of January 2024, and we projected the value in the three pro forma financial statements for 60 months. And so we use all the 60 months from 1st of January 2024 to 2028. If you actually start in March, then March 2024 plus 60 months will be March 2029. And so in this case, as you can see, the cell became yellow, became an input cell, and so you can modify it. But if we start in January, then you don't need it, and the model will switch to not applicable cell. Then going down, you can select the seasonality. You can adapt your model to the seasonality. You can select if you are open or not, a certain month. Maybe certain months you just decide not to open, so you can select it here. The daily field occupancy rate during weekdays and weekends. So maybe, for example, out of those 16 slots that you can sell per day, you sell 50% in January during weekdays and 65% in January during weekends. And you can modify this occupancy rate across months so that you account for seasonality, right? In summer, maybe people want to play football more than in winter. You can adapt it here. And then you can also change the occupancy growth rate per year. So maybe the first year, not a lot of people know about your business, but then they start getting to know your business because of word of mouth, because your marketing efforts and so on. And you can adapt here how much these occupancy rates grow every year. This 5% is not, you don't sum this amount, but it's just you increase by 5%, right? So as you can see here, the formula for the next year will be given by the current occupancy rate. So for example, for January 2024, we have 50%. For 2025, we will have 50% that multiplies 1.05, right? So it won't be 55%. It won't be 55%. It will be 52.5, right? 5% of 50, yeah. Then next section, we have the revenue section. So how much do you sell each time slot for? And maybe this price can vary per month, so you can adapt it here. So you also can have a seasonality based on price, and then how much this price grows every year. Then you might have also additional revenues, right? Maybe you also sell food and beverages, training accessories, and so on. And you can select it. You can select it here. So first, you need to write down the categories to consider. And the categories are important because we use the categories in the pro forma financial statements. So the revenues will be aggregated across categories. The categories that you insert here will give you the you will find those in the drop down that you can find here, right? So we have just added test one, and you can find it here. If we remove it, we won't find it anymore. And then you select the individual product, right? So for example, a towel, a t-shirt, gloves for the goalkeeper, those are training accessories, and then a drink, and you might also add food or whatever in the food and beverage category, together with the sales price, how much this price should grow per year, and the sales mix, meaning out of every customer that every sale that you have, how much of this do you actually sell? Then expenses, you will in the expenses tab, the average cost per order. So you will find the same categories that and the individual products that you have added here. This is an output cell, as you can see, not an input cell, so no need to modify that. And you can add the product cost and the growth per year of this product cost. And the difference between these two will be your margin. Then you might have recurring expenses. Again, you select the categories to consider, you type them in. These categories constitute your drop-down values. Then you add the individual items. You can select a start date for this recurring expense, and then how to calculate it. Do you want to calculate it as a fixed amount? Do you want to calculate it as a share of sale? You can add it here. Of course, if you select a share of sale, then the model will tell you, okay, then give me a percentage for the share of revenue. While if you do fixed amount, you will need to add a fixed monthly amount, and a growth rate per year. You might have one-time expenses. You can add those here, like center renovation and website building, the category, again, drop-down menu coming from the categories here. The expense date, this is a one-time expense, and the amount. Then your hiring plan, again, department, you type in the different departments, then you have a drop-down menu from those departments. You select a specific, you can write a specific role, select the salary, start date, end date, if any. If you plan to hire them indefinitely, just leave it empty. Employment taxation and salary increase per year. Then CapEx, if you need to incur in some CapEx when you start or during your operations, you can type it in with the purchase date, the amount, and the depreciation schedule. So how much this equipment and accessories will last before you need to replace them. And this helps the model basically to properly split this amount across different years. And then the balance sheet. So you can select the inventories, account receivable based on the revenues as a share of revenues, and accounts payables as a share of cost of goods sold. And then finally, equity and debt. So if the company receives a certain amount of money from an investor, then you can add investment date here so that we can properly account for that money. And same with debt. So if you borrow some money, type in the remaining months, debt issuance date, and debt repayment start date with the interest. If you already have some debt when you are filing in this model, then just type in the outstanding amount, the remaining months for which you need to pay, and then as debt issuance date and debt repayment start date, just use the financial plan start date that you have here. Then the next three tabs are dashboard tabs, where you can find different metrics of your business, numbers only, charts, and charts and numbers. So in the numbers only, you can expand all of them or just click on the two here. It will expand all the values. And you can find an overview, a numerical overview of, for example, total time slots sold, total customer of additional revenues. So how many, for example, training and accessories stuff you sell every year, average number of time slots sold per day, and so on, CapEx, expenses, and so on. Then the same with charts. And then in this dashboard charts and number tab, you can find both, so chart and number. But in this tab, you can see not only the aggregation by year, but by clicking on the plus button here, new columns will appear, and then you can find also a monthly breakdown for every metric. So you can see what is happening actually month over month. Then the next the next tab is the financial statements tab. So where you can find the profit and loss statement, the balance sheet, and the cash flow statement, and the different and all the metrics within each statement. So time slots revenues, additional revenues, overall revenues, total COGS, gross profit, EBITDA, EBIT, earning before taxes, and net income, total assets and total liabilities and equities, and then operating cash flow, investing cash flow, and financing cash flow. Valuation tab, based on certain assumptions that you can set here, we derive a weighted average cost of capital. Then we project the free cash flows. We discount them at present value with the weighted average cost of capital that we have derived here. And then we have an implied valuation today, together with some multiples. Then in the revenue tab, all the following tabs are calculations tab. So in these tabs, you can find basically a breakdown of revenue, COGS, expenses, and so on. And by clicking on the two here, which will expand everything, you can see all the sub-metrics that constitute your revenues, that contribute to your revenues. So for example, the number of fields, yearly and month by month, the average number of time slots sold per day, the price of time slot, the overall revenues, same for additional revenues, and so on. Same for COGS, same for expenses, same for full-time employees, same for CapEx, and finally, same for debt, where you can see the debt issuance, balance at the beginning of the period, capital repayment, that balance at the end of the period, and the interest expense.